answering your questions about retirement. It's Money Talk with Michael Eastham.
I'm worried about the cost of long-term care. How can I plan for it without wiping out my savings?
Well, planning for long-term care can certainly be a tricky consideration, but I encourage everyone to do it one way or another. And you're absolutely right. Focusing on long-term care, you don't want to wipe out your entire lifetime savings, but at the same time, you have to take it into consideration. And it can be very, very expensive. I mean, imagine this. Let's say long-term care is $6,000 a month, and that's a fairly inexpensive long-term care facility, and you've got to be in there for 3 years. Think about that. That's over $200,000 in long-term care expenses over that 3-year period of time. That's a large chunk of your investments. So make sure that you understand the elements. So let's talk about them. There's a few things that you can consider. One is if your assets aren't substantial, well then you may have to rely on Medicaid for long-term care. Because contrary to popular belief, Medicare does not cover long-term care for the long run. So you've got to be prepared. Medicaid can contribute to long-term care, but you have to realize you're not going to be able to have all the choices that are available to you. You're going to have to go with the choices that are Medicaid approved. And most of the time, those aren't the most optimal nursing home or nursing care facilities that you might select if you had other options. So Medicaid is one option. Another option is to purchase a long-term care policy or some sort of a hybrid. And today there are so many different types of tools that you can purchase. There are still a few insurance carriers that have the pay-as-you-go type where you're paying money every single month or once a year to have long-term care coverage. The problem with those is that they've changed so much. There's been so much negative publicity about those types of policies over the years that in most cases it's not something that we recommend. Another option is a hybrid policy. And a hybrid long-term care policy simply involves combining either an insurance policy or an annuity policy with a long-term care rider or some sort of a living benefit rider. Those can work out exceptionally well by leveraging your money. So for example, let's say you take $100,000 of your assets and you sock it into a life insurance policy. Well, by putting that policy in place and adding a long-term care rider, that could give you, $300,000 or $400,000 of long-term care benefit if you activated the rider. So that's one option. The annuity option is typically a better option for someone who is maybe over 68 years old and you're not necessarily in the best health, so you're less likely to qualify for the life insurance policy option that I just mentioned. But an annuity is less rigid in terms of the underwriting. So you could take that same $100,000, possibly put it into an annuity that has a long-term care rider, and that long-term care rider might give you $200,000 to $250,000 of additional long-term care. Or there could be a policy premium option where you continue to pay in a small amount monthly and it provides you a lifetime benefit rider with for long-term care. So those are a couple of options, and then the final option is simply earmarking, or what I refer to as self-insured. So if you've got maybe over $2.5 million, and then you may be a good candidate to self-insure. And what do I mean by that? That simply means earmarking some of your investments specifically for long-term care if you need it down the road. Maybe that number is $300,000 or maybe it's $600,000. You choose how much of your assets you'd like to earmark for long-term care. You look at those assets a little bit differently. Maybe the investment strategy is a little different on those assets as well, and that provides you the benefit. So if you're, I'd say maybe under $500,000 in assets, look to Medicaid as an option. If you're between $500,000 and $2.5 million in investable assets, then perhaps one of the hybrid options with life insurance or an annuity could be a good option. And if you're above the $2.5 million, then self-insurance is certainly a good option that you can consider. Again, not blanket answers, but generalities that I think you can apply. And of course, if you have questions, make sure you reach out. We'll talk to you about your individual case and see what the best option is for you. So make sure you like and subscribe so that you get the most up-to-date information on a weekly basis. Thanks so much for listening.